All right, so excellent. We are officially in our start mode here. Good evening, everybody, as we are concluding not just the end of the month of March, but it also we end the quarter. Many of you have had the I think a few people in the audience tonight have had the privilege of attending some of the workshops that we've done in the Signature Series with TradeStation around the country, either San Diego, Atlanta, New York, and then San Francisco. I've also given some presentations with the Seattle group out there, and it's been eye-opening for a lot of folks about the indicators that I've created and how they work and can be used in TradeStation. As such, that's why we invited you tonight to our house, my trading room, to get an introduction to how we utilize the indicators and how they are available on TradeStation. So with that said, the funny thing is that this photo was actually taken, I believe, at the Long Island Stock Traders Group as we were looking at a buy signal with an increase of momentum in this momentum indicator, which is exclusive with TradeStation, which is pretty exciting. May I first make mention that we take a second to read this disclosure and disclaimer that, of course, trading is risky. If you could just take a minute to read that through, that'd be great. And if you're interested in a copy, we can always send you a copy of this, as well as you can review the video. So a little bit of history without getting into too much ado. I'd like to point out that this book, Candlestick and Pivot Point Trading Triggers, this book was published now 15 years ago. No, excuse me, 15, listen to me, 10 years ago. And it's came out in 2005. It's 2015. That was 10 years ago. Candlestick and Pivot Point Trading Triggers. And a lot of the concepts in that book have been programmed into TradeStation and several other platforms. But then in 2012, as I was becoming increasingly more bullish in the stock market and was sharing some of my concepts and how this was applied and applicable to stock trading, we took a lot of the concepts and took it a step further using a lot of seasonality and different other indicators that are more exclusive in the realm of stock and stock index trading and sector analysis. And that, I think, was very critical for a lot of individuals who had taken the time to buy and to read the book, more importantly. Some of you might be familiar. I was the contributing editor for the Commodity Traders Almanac. And this book here was fabulous. A lot of people weren't interested in trading commodities per se, like oats and soybeans, but the concept that I brought to the table were the high correlated stocks and ETFs that correlated to underlying markets. I discovered and discussed that over a decade ago in this book, when in the first chapter we even introduced what was going on with a brand new, and this sounds really strange in the environment that we've had, but wait till you hear this. I introduced back then this brand new product called the FXE, the ETF on the euro currency, and said, listen, if you guys are trading the FXE for stock traders, and it will be optionable, but use the futures information and the futures charts and futures data for your analytical concepts and for directional trade ideas, because we can use information from the futures because of the transparency. And the same concept was explained in that chapter, about first chapter there, about how it is applicable for foreign currency trading, which is really evolved into a popular trading vehicle for people around the globe. I've created this indicator. Many of you are familiar and already have accounts over at Thinkorswim, so I'm just calling it what it is. It's the PPS indicator. It's the buy-sell signals. They're bullish, bearish momentums. We have the person's pivots, which are filtered pivot point moving averages that combined help to filter out and give us an idea of what the market condition will be in the next time frame that we use, as well as and that time frame can be anywhere from a day to the weekly to the monthly. And as I introduced in this book, Mastering the Stock Market, how I've been using quarterly pivot analysis on a financial calendar for many decades, and it was something that I find to be extremely helpful and has been something that has really helped us define the current market condition, and as it did for this first quarter. Now, the exciting thing is that we are coming into a new quarter, so we have new outlooks coming up, not just based on a monthly outlook, but also a quarterly outlook. In the event, we also have, as we wrote about in this book over a decade ago, the high close and low close doji, and of course the last conditional change. So there was an enormous amount of work that is still applicable that was written in this first book to this minute, to this day, even looking at today's trading environment. So what have we done? We've put a lot of that information into the TradeStation Pro package here that we will share with you guys how we're utilizing this and what it all means. First off, what do we have in the Pro package? It has our buy-sell signals and the moving averages. And the reason we have them is because they're easy to scan, and I'm going to share that with you in just a minute. We also created the candle patterns because they're extremely effective in identifying market bottoms and eventually market tops. And that's the high close and the low close doji. We'll discuss this tonight, as well as the principles behind it and the rules behind what we did to create these scans. Also, the person's pivots, as I've already mentioned, daily, weekly, monthly, and quarterly basis. It doesn't just give us the direction, but it also it gives us what the potential support and resistance that's filtered out, so we don't have a bazillion lines on our screen. Most importantly, I think, as a trader, volume. Volume's been a tricky element for many traders through the years, especially in the last 8 years. A lot of people have been looking at volume and not really understanding that the fact that sometimes we see these strong trends and there's no, in the volume histogram, there's no corresponding increase in volume, and it's been tricking a lot of people as I've been going around the country and polling audience, and people are frustrated. And there's a very logical explanation as to my reasoning why volume is not working as it once used to, and why we're seeing volume levels diminish in trending market conditions. Mainly because I think a lot of people, and the quick answer is, you've not seen me in person give the explanation, I'll just share it with you. In the last 8 years, we've had an increase in more institutions as well as retail traders using options. And options, if you go and put on a synthetic long position by selling a put and buying a call, that trade is almost going to give you the exact replication performance of an upside move in an individual stock minus a dividend, as putting the same capital down, or larger capital, on an underlying stock position. But when you go and use the options, which is the derivative of an underlying market, the trade volume in that option is not going to show in the underlying securities volume. So besides that, the dark pools that are created, the engine matching systems within some of these institutions, that is part of the whole concept of what's been masking the volume trends. And we do have a volume analysis and indicator that's helping to solve that solution, and one that I'll just share with you. It's not my indicator, it's Joe Granville's on balance volume. We've just improved on it a little bit, and we use moving averages over them, which seem to help us to determine crossovers and upside moves with volume that then give us a better confirmation that there's life or more lifeblood into a particular move. My histogram, which I'll talk about, and again, that's an exclusive feature with TradeStation. We also created, which is available in TradeStation, the commitment to traders data, which is very useful. And some of you, if you were at the Traders Expo, you saw me give this exact example of how we could potentially see between a 2 to 6% correction at the end of February in the S&Ps, as the small speculators were the only ones really holding the bag long in the market. But if you're trading indexes, we also created a breadth analysis for all the major stock indices, and I want to talk a little bit about that tonight, because I think it's very imperative that while many people believe in what we call, I guess another way to think of it this way is, what is breadth analysis really for a stock index? Real simple. If you take a look at advanced declines, how many stocks are advancing when a stock index goes up relative to how many stocks are declining? And if the market's moving up and more stocks, meaning, you know that term, there's strength in numbers, the more numbers of a stock index, the more of its component stocks are going up in value in association with the index price value, then it becomes more of a bullish outlook for that index, right? Many people don't realize that they'd like to, in a simple little lesson tonight, and we'll share with you in a breakdown on the NYSE, because that's what the majority of traders, institutions, and other platforms only have access to, is the NYSE, the New York Stock Exchange Composite Index information. So if you look at a McClellan oscillator, it's based off the NYSE. If you look at other breadth analysis, most of it is all based off the NYSE. And I'm here to share with you that's no longer, and has not been for many years, a reliable, pure, reliable method of analyzing the strength or weakness of the market. And I do have that for you tonight's presentation. And again, my last conditional change pattern, which is very effective in understanding the strength of a trend, A, B, where to place stops, and C, how we can look for entries on breakouts or breakdowns from that last conditional change. Incidentally, that last conditional change, this is something that it's actually discussed on page 264 of the book I wrote over a decade ago. So I'm not bragging. I'm saying, and don't take it as bragging, what I'm saying is what was written a decade ago is as useful then. It's actually even probably more efficient in today's market environment. And we are, make no mistakes, and we've been in a pretty aggressive traders environment. And if you're trading stocks, that is, it's been an aggressive environment. If you're trading even commodities, I mean, gold's been pretty violent. Crude oil's been pretty violent. So everything, there is volatility in the air. It's just a matter of understanding, you know, what's been going on. And when I say that, I mean this commitment of traders data. One of the things that many of you are quite well aware of, if you go to our website, you will notice that we put a lot of great information there in our weekly market thoughts and observations, including what stocks we're stalking or looking for bullish setups, what sectors are bearish. In that weekly thoughts and observation over 2 weeks ago, we even announced and said, hey guys, alerting to a potential reversal in the euro currency from a simple standpoint, and I'll share this again with you tonight. That commitment of traders data reflected that the hedge funds were net short versus long by a 4-to-1 margin. An enormous ratio as it relates to the overall open interest of the euro currency. Hedge funds short 4 versus 1. It was kind of like a little bit overboard from a contrarian standpoint. Now, if you understand how a hedge fund works and how they make their money, they do charge a management fee between 1 and maybe 2, and some are either higher than that. And they also take monies from profits that they make in trades, and it's called the performance fee. Most standard funds are 220, meaning 2% management fee, 20% of the profits based on a keyword quarterly basis. So typically what can happen, folks, is by understanding the name and the rules of the game, if we're closer to a quarter's end and all of a sudden you've got a market that has been in a pronounced trend that might be heavily one-sided by a group of traders, meaning the professional hedge fund community, who make their money by not holding a position forever, but by trading, they need to, if short and take a profit, need to buy it back. And one of our analysis showed that, and that's why we were anticipating going ahead of Janet Yellen and the FOMC. We were looking for a bounce in the FXE or the euro currency, which I'm sure everyone knows by now we did get. I don't believe that the euro currency is going up much beyond, maybe we've got another 100, 200 points to it, but it might be short-lived. Typically what happens is you've got to wait a week or so for to see if these positions are put right back on again, because if you sell something and you buy it back, you've taken a book to profit. That doesn't mean you can't get back into the same trade again and continue to ride the trend. But you've booked your profit, and now you're able to take that 20% management performance fee. So that's kind of like how some of the hedge funds work, and that's how we utilize the understanding of commitment of traders data. All right? Now, Person's pivots. Many of you are familiar with pivot points, floor traders pivots. They've been used for generations, decades. I started using them myself back in early 1984. But what the thing is different about pivots versus Person's pivots is that we are filtering out what the market condition is by a moving average concept. All right? And I'll share that with you in just a minute. But the most important element is these two patterns here. And these are two extremely high probability patterns that I was always, as a trader, looking for the most bullish pattern. So I was looking for that as I found the abandoned baby. And I know an abandoned baby was simply what? An island bottom. Well, island bottoms don't happen a whole lot in your career, that's for sure. And so the second, as I started studying Candlestick in the early 90s, when I was like, man, this morning doji star sounds incredible. I just scan and start looking by my eyes for the morning doji star. And the funny thing is, I never saw the morning doji star form as it was supposed to form, meaning after a long downtrend, tall red candle, next candle opens gaps lower, forms doji, next candle opens gaps higher, closes through the midpoint of the first candle's real body. And there are some variations, but that was the general gist of things. But what I did note was that a lot of times we would see, after a downtrend, we'd see a doji, and it would happen near, coincidentally, one of my pivot support areas. And the common denominator was within so many bars. So you might have a doji, the next one might be a hammer, the next one might be just a inside range bar, or a couple bars later you get something going. But within certain bars, we would see if the market closed above the high of the doji, then it would trigger a reversal and give us a clean setup. So if the market closed above the high of the doji, we would be looking to buy on the close of the next session open, and our stop loss, which was amazing because we had a defined entry and the condition of the entry. The condition is either on the close, so if you're watching the close and it's well above the high of the doji, start to look to implement long positions, buy on the close, or the next session's open. And so we have a condition of where to get in and how to get in. Next, what about risk? Well, I know that I want to at least put my stop below the low of the doji, and we had a rule that we implemented because sometimes we weren't seeing the doji as the exact low. It was kind of hidden within a couple bars, right? So we would place our stop below the lowest bar, say X period, or a few bars lows. So we now have an entry and we now have a risk, right? So that's a defined risk setup. More importantly, what was really neat about this pattern, as I wrote about, that we needed to see, it was such a, after a downtrend in the market, we got a doji, we should start to see an acceleration of a reversal. And if we didn't get that reversal, if we didn't get that positive reaction within X period times, then we knew that the trade might not work. This was kind of like a pattern that says it works immediate. It should work within the next few bars, right? So we had what to expect. So let's say, for example, this is a 5-minute chart. Then we know that in the next, if we trigger a bullish signal, we know within 3 or 4 bars, let's say, for example, or 2 bars, more importantly, if within 2 bars we don't see any positive change, then something's wrong with the signal. So I know that if I'm not seeing the expected results of what the powerful reversal pattern should do, then we know to exit the trade and therefore minimize the losses or exposure to risk. So That was why this was such an important element in my trading. And the opposite is true for downside action. Now, when we are using TradeStation, these bars will be colored on the charts. And we have scans both on daily and weekly time frames in TradeStation, and no one else has done this. So what does that look like? Well, I've also done what I call the pilot program on Twitter, and I would send out tweets, hey guys, we got a high close HCD, standing for high close doji. Well, people didn't know what HCD stands for. They didn't get an advantage of it. But HCD is the terminology used for the high close doji that I dubbed over a decade ago. All right? So one of the things that we like to see is, as this is just a stupid little company called A&F, Abercrombie and Fitch, and I'm being facetious when I say stupid company, just another stock, but after the market moves lower, note we have this histogram, which is a price-based indicator sharing with us that while we are seeing a price move lower, it's telling us that, hey, that move lower is on bullish convergence of momentum, which means that it's probably going to go from down to possibly up pretty soon. We want to wait for a trigger. All of a sudden we get a doji, nothing happens, another doji, but then notice what happens. It's painted on the bar. It's painted on the bar. We get this orange colored, which signifies that's the doji. Now, over here, as you can clearly see, it's not my indicator. It's on balance volume. I've just overlaid a moving average to help me uncover if the market moves, maybe a couple theories of moving average concept that you might know, such as if a market gaps too far from a moving average, it might show that maybe we've got an exhaustion bottom in. But what we do want to see is if price is moving up, we want to see an increase in the volume indicator. And all of a sudden you get the trigger to go long, and now you can define what your entry is and what your risk is. What's your profit objective? Well, at the very least, you can figure out the market might come up and fill the midpoint of a gap. But needless to say, what we also have put up here, as you can notice, there are these little white lines. And these white lines go across our screen, and every time we see a new last conditional change, the market makes an advance to the upside, we know that we can start to place our stop loss below the white lines and start to trail the market to the upside. That's the whole purpose of what we're looking for. Scan for opportunities, be alerted to potential changes in the fact that a market that sells off on maybe excessive volume and decline of momentum. If we can teach people this, I think they'll be looking for better trade opportunities. Now, when I look for trades, now this is from this just past February, which was an interesting time period in our markets, because at the end of January, there was a lot of people thinking that the market was going straight down to hell in a handbasket and it wasn't going up. Well, the funny thing is we had from on or about January 30th to February 3rd, the number was staggering, the amount of stocks that formed individual high close dojis. Now, the high close doji, the doji is what we've labeled, as you can see, it's a blue bar, and the doji being blue, when we're looking for buying opportunities and scanning for buying opportunities, we get a orange candle that paints that confirms that the criteria has been met, that we now have a high close doji official pattern. It's up to us to say, well, do I like that pattern first off? Do I want to be buying ahead of whatever? What does the momentum look like? We certainly have positive momentum, meaning the green and the red is moving in the right direction. But most importantly, as the trend is moving up in price, note that the on-balance volume is also moving up and now remaining above its moving average, showing accumulation, not distribution. So we've got a lot of things that we look for in the marketplace. Here was another, and this is exactly the scans that we utilize. We did this trade, actually announced this in our trading room, and I know I certainly have a few people here tonight that can testify to that. McDonald's was one that we did an enormous amount of work that not only the monthly chart was looking pretty in a more of an accumulated pattern due to those long-term wicks on the monthly chart, but note that the weekly chart, and this is kind of key as we get into sharing with you how these scans work, we had a PPS buy signal on a weekly time frame. So the market had kind of moved up and it sort of moved back down into the pocket of support of moving averages, right? Well, here's what the daily chart looked like. So as the market went up on a weekly chart, it started to move a little bit lower, but then look, a doji and then the high close doji, and it's like, hey guys, we got a high close doji. This thing could really start to break out because there was a huge volume accumulation. Now, what I try to teach and why I've created this on TradeStation is because, as you can clearly see, the volume levels are moving on a histogram. Now, this is not my platform. This is TradeStation, so I didn't fix these volume levels. This is what it is, and I think this is what people are really struggling with trading. You can clearly see the volume levels on a daily chart, and you can clearly see the volume levels declining on a weekly chart. And I think that's why we have a better tool such as on balance volume to help us to undercover and understand what the true direction on a cumulative basis of the volume is and help define the strength of a trend. So looking at volume, individual volume histogram bars is not as effective in this environment as it once used to be, as I already gave an explanation as to why I think that is, as volume is being masked. But the high close and the low close doji scans are in of themselves extremely valuable. We have, as you can see, this slide shows you, daily high close, daily low close, weekly high close, weekly low close, and then I have a set of predefined scans, which I'll go over tonight. There's 3 buys and 3 sells for various conditions. Matter of fact, I'll just tell them to you right now. The first scan that I look for is show me, and this is a very powerful scan, if the PPS, and that's that blue arrow, is in a weekly buy, and let's say, for example, it has a 1 or 2 week pullback, but it's still maintaining a weekly buy, then I want to know if we're getting into daily buy signals when the weekly is in a buy mode, because that might just be kind of helping to illustrate kind of like one of these types of patterns that we see where the weekly goes up and then it has a small shallow pullback and all of a sudden the weekly generates a buy and it starts to shoot up again. And we may want to consider that to be kind of like a wedge formation before an accelerated breakout. So that's where we would use the first number 1 scan, buy signal daily when weekly in a buy mode. The next one is show me if we got any buy signals near person's pivot support. Well, hell, that's a great idea. I want to know if the markets maybe moved down and it came to pivot support and follows through with a buy signal at support. That would be dynamic. Show me how many stocks have gone down near monthly pivot support and flash a buy signal. And then the third and final is just show me any stocks that are in a daily buy signal. Just one of these little blue arrows right there. Just want to know how many are in a buy signal. So the opposite is true for sell signals. So when we look at McDonald's, for example, in that situation and on an intraday basis, one of the neat things is on an intraday basis, you also had what formed the base of the move was on a 15-minute basis. Not only were we in a daily high close doji, we're in a 15-minute high close doji. The momentum indicator was growing, volume was accelerating, and even here, looking at volume, it's not until about, as you can see, volume's still kind of moving sideways until all of a sudden, right about here. And that's when you start to get the acceleration of your volume. The funny thing is, as the volume histogram's accelerating, notice that the volume here is decelerating, showing you that the market has probably expunged its bullish upside. So if you are looking at volume and histograms and you've been struggling with this, I'll tell you right now, I can't blame you, because it has been giving for many years some false indications of the market strength, as I've pointed out my reasoning. And that's why we've created these indicators to help us uncover not only as the market, which is a really cool feature. Can you imagine as the market's starting to move higher, how is the strength of that move? Well, as it's moving higher, the momentum histogram is decelerating and the volume indicator is decelerating, saying if you were buying here, you may want to get out there. Now, a little arrow popped up. Here's another thing. Notice these little white lines. These white lines are the last conditional change, and they tell you that there's still a valid buy signal until the last conditional change. We get a close under a white line. And note, if you look closely, this sell signal broke and closed below the last conditional change, or that white line. So if you were buying in here, not a big deal, $95. The same day the stock goes to $99, a $4 move, right? I mean, on an intraday basis, these types of moves where we see 5% stock moves on a given day, like today we had Twitter, or I mean, there was a few big moves today in some of the markets. Another stock is one that I actually got out a little early, and I'm saying that because there's an individual here that knows that I got out a little early. NAT is the stock, but I did well on it, and it was, you know, we move on. Any event. And Jeffrey, I know you're here listening tonight, so any event, thank you for being here again. This is a very interesting concept because this is crude oil, all right? And crude oil pattern, we started to see back in early January of this year, the market give a high close doji. It did have follow through, and then after 1, 2, 3 periods, no follow through, and then finally get a sell signal. I'm not waiting to get stopped out. That's the beauty of understanding the nature of the high close doji. You should see immediate results, and if you don't, LMORFN. It's an old floor traders acronym, LMORFN. It stands for let me out right frickin' now. So one of the things that we do note, though, as we come back and start to stalk the market, that one thing you might not be aware of, I am, because I wrote the book on seasonality, is about the best time to buy crude oil and in the energy sector is towards the end of January. And sure enough, that's why we were looking for a market as we started to see the momentum histogram form bullish convergence. And then all of a sudden, we get this big breakout to the upside and a huge upside move in volume using the OBV indicator with our moving average. So it gave us good confirmation that this might have some further upside. Well, the funny thing is, many people aren't aware of this, but you know, we were promoting this on our weekly sheets, even as the week beginning January 23rd. So we said, hey guys, guess what we've got going on? We've got a weekly high close doji in XOP. In the XOP, if you notice here, we generated a weekly high close doji at pivot support. That's that green line right there, with an increase of bullish convergence on the histogram. The volume started to pick up mildly. As you can see here, the uptick in volume at that point in time. So when we draw our line in the sand, so to speak, and say, well, what did the volume, comparing an apple to an apple, do at that point in time? And we started to see an uptick in the volume as price was moving up. In that XOP, it was very, it was quite a fun trade, to be honest with you, because while the majority of people from January 15th, you can see this is December. You can clearly see the beginning of the month of the year, 2015. That's February. That's the 15th of the month. As we started to see at the middle of January, how many people were not interested in buying into energy stocks? Well, the funny thing is in order for an exchange traded fund, an XOP, such as that type of market, a sector ETF, to generate a high close doji, that must mean there's some serious buying going on creating that buying pressure within the stocks within that subsector. And this is one called Valero, which I know is all over the news now because it pays a dividend and it's had a big move and it's defied gravity. But the funny thing is when everyone was talking about not buying energy stocks by the beginning of February, Valero had already rocketed up. If you take a look at these numbers, almost 15%. And it's seen, some upside and it's chopped around. But we got really good confirmation of buy signals, convergence with volume behind a lot of these markets, which is why we weren't that bearish in the market. But so the person's pivot indicator is a powerful tool that absolutely helps uncover predetermined support and resistance. The PPS gives us defined triggers. And so that's why we put together, when I wrote that book a decade ago, Candlesticks and Pivot Point Trading Triggers. It was to define certain patterns and certain anomalies, certain algorithms would happen. And thus, when we got a market that came to support, and my rule is I never sell support first, right? I always look for buying opportunities at support. If the conditions are right, and then people would say, well, what do you mean the conditions? And the conditions are, well, if we have positive momentum, if we have a change in valuation in the direction of the volume, for example, then I can get more bullish at a market low once I get a trigger. So combined with knowing seasonal price patterns, it does happen when we can use volume for confirmation. It gives us a fantastic edge. When I give you a description of when I say the indicator paints. Now, TradeStation, many of you are probably going to put a gun to your head pretty soon with the frustration because TradeStation's coming out with the release of 9.5 and it's going to be mandatory that everyone switch over to 9.5. I'm sure everyone's known this. If you don't, that's that. Okay? Now, one of the things that I'd say is when we get the arrows, and you can clearly see the arrows right here. They give us defined trend moves. Once in a while, this is a high close doji. Well, the market went up. And again, look what time this is generating a signal, 2000 hours, right? In right before the, during the Asian market, before the European session. Sell signals are generated, market goes down, buy signal, and all of a sudden the market goes up. This is, as you can see, 312, just as a screenshot, 313. This is not old stuff. This is current market environment. So for traders that looking for reversal trends and confirmation, if you have something more behind it, and as you can see, sometimes, again, the definition, if after a downtrend you get a high close doji, not after an uptrend. Big difference, okay? Just knowing the rules. This is Person's Pivots, the daily. Now, may I add that a lot of people are very fond of the Person Pivot Indicator because, as you first should know, is that it is, without a doubt, it's determined on the day's close. And it gives us a projection. If you can clearly see, if this is a day like, say, Tuesday, and at the end of Tuesday, you take the high-low close to throw it in a computer, and it gives you a highlighted red bar and a highlighted green bar. Well, if the red bar of the next time period is higher than the current time period, and if the green of the next time period is higher than the prior time period, you have an assumption the market is in a bullish outlook for the next time period. So what you want to do is look for the market to maybe pull back to support and then look for this little thing called some kind of a buy signal in a bullish environment. And that buy signal is that arrow that points up, or again, an arrow that points up. And one of the neat things is as the market defines a trend, you don't buy a market that after an uptrend it generates a sell signal. Wait for the market to pull back, right? Funny thing is this was a every Thursday morning, except for if I'm traveling out of town, sick, etc., disclosures. Most Thursday mornings, I do this thing for TradeStation called their morning briefing session, and we go through A to Z market conditions and specific trades that I give out. They are recorded. If you're a TradeStation client, I'm sure you can find the recordings of the morning briefing sessions. If you look back last month, in January actually, if you look back a few weeks back, during the European Central Bank, the ECB meeting, Mario Draghi was speaking while I was giving the presentation, and I was telling people, folks, this market, and it was selling off. I go, the market is giving us a bullish bias to the upside. I said, we have strong volume confirmation. We have a solid momentum indicator. And so if the market does happen to push back down, wait for some buying opportunities. This is not a selling opportunity, and of course we all know the market went up. But that was based on the valuations of this tool, which is really an incredible indicator because it's a leading indicator. It tells us at the end of the day what the next time frame session might be. Now, obviously, if a market breaks a support and then all of a sudden it breaks support, but then you get a buy signal, you might want to take an attitude of buying because it's near support. But if the market, just as a quick lesson, breaks that support, comes back up, and that support acts as resistance, then we got another thing coming, right? Notice that we only have, if you really take a look at it, one highlighted red, one highlighted green. And that is really the essence of the indicator to help us say, look, can you see the highlighting red and the highlighting green? If the market is supposed to be bullish, then we shouldn't break support. And we should look for the market to regress to the means, come back to the daily support or the weekly support or the monthly support, or more importantly, the quarterly support, and look for buying opportunities. And that's the essence of the person's pivots. Now, if you're not a day trader, the daily numbers are awesome to look for. Maybe after big uptrends in the market and you want to establish a position, then wait for the market to get near that pivot support. You have a target number to place orders to get in as it may trade near your support levels. So there is a reason to use the daily numbers as I teach. Now, the other indicators that we have in our package are what we call the bullish and bearish last conditional change indicator, LCC. It helps us to define where to place our stops and spot trend reversals, as I've already illustrated a few slides earlier. So when we use it with the person's pivot, buy and sell indicators, we get fabulous combinations of not just stop placements, but when does the trend cease to exist. So on a given day with the S&P 500, if we go and trade, as I pointed out just a few minutes ago, I do not like to sell support because sometimes the market goes through the support. And if we go through the support and people are like, oh, I got to get bearish, it's going down to hell in a handbasket. While you might make a couple ticks selling a breakdown, you may miss the whale of the trade to the upside by being focused on the wrong side of the market. So if we have an idea that the market is bullish because that pivot right there is above that olive color, gold color is what it's supposed to be, but it's olive or gold, I guess. It's gold. You can see the gold. This is deemed to be a bullish day. So on a bullish day, I want to look for buying tails. I want to look for buying triggers. I want to look for high close dojis. And I want to see if there's volume behind the move. And therefore, maybe I don't want to buy the futures. There could be too much risk. But I can take that buy signal and utilize it, maybe day trade an option, a high delta, 80 delta with, a weekly option and trade if I'm going to trade a setup for a day or two. All right, that's another great example of how we are utilizing not just the indicators, but the market conditions in this environment. Okay? So here's an outlook of just another little company called Priceline. And Priceline was actually one that, while it might be a big risk and the bid and asks are pretty kind of tall or wide on the options, it's still a fun market that we've had success trading. You can clearly see we're near this quarterly pivot support. You can clearly see where we have a convergence of the momentum, and we still have some positive movement coming in the volume indicator, right? And as the market starts to give us a high close doji, it's got a PPS buy signal, which is that little arrow right there, confirming we should start to see positive results. And we do. We get one little setback and then we're off to the races. But look, the last conditional change, it never violated below the last conditional change until we got up to, and then, it hit near quarterly pivot resistance. By the way, this is this year's setup, not 14 years ago. This is current market environment, market setups. So this is the S&Ps, as we can see, even coming into like a Fed day. Never sell support. Always look for the market to see what the heck happens. I'm going to get this. Hopefully you see a common denominator here. When the volume trend is moving up and a market comes near support, you probably want to look for these buying opportunities. And of course, we absolutely have seen some stellar moves in the marketplace using the indicators that point to the direction of the market and, more importantly, the condition of the market. Now, my person's package, it might be difficult for a lot of people to see what's going on here. But you can clearly see, if you read up top here, and I'll point this to you, which is really interesting, you can see where it says monthly pivot. And you can see weekly pivot. And then I want you to take a look at this column right here, reversal, and then trend status for the day. So basically, this is a trading system. We have stocks with a 5-minute, 60-minute, well, that should be 15. I obviously changed it around. Another 60-minute, daily, weekly, and then monthly. Because I want to look, in order to figure out where a market might go, I want to ask myself, well, where the hell has it been? And if the stock is up and has had a tremendous move, I don't think I want to look for intraday buy signals as much as I want to pay attention to daily sell signals, okay? If it's in a weekly sell mode, if we've come off a major resistance of 91, okay? So, for example, if I look at this and I go, Walmart, well, at the time, it's last trading at 84, and I can immediately see that, well, at the time, the resistance is 93, and the support is 82. So if the market's trading at 84 and the support's at 82 for the monthly support, that is about 1.65% away from the support level, and it's 10% away from the resistance. And if I am bullish the market, I can then make a determination is, well, if it stays within the pivots and it goes up to back to test the monthly pivot, what would be my percent rate of return, and what's my percent loss? So I can start to formulate and say, do I want to even take this trade when I get a setup or a trigger? Because I know from not just where the support and resistance are, I don't have to look on a chart, I can see it numerically, and I can see it in terms of percentage from both the perspective of if it breaks support, what's the percent loss? If it rallies to resistance, what's my percent gain? And that's pretty cool stuff, to be truthful. All right? More importantly, this column also defines, and I'll share with you, what stocks are generating a buy signal. And I don't know if you can see on this, this is not that old or long ago. We had a tremendous one of our, yearly, I'll share it with you now. This is a side note. For the last, I believe it's 5 years, Herbalife. I know, don't yell at me. I know, some people say Ponzi scheme, whatever. It doesn't matter. But the point is, it has a strong seasonality to rally from January into April. And so we were stalking and looking at this as a trade, and obviously it did quite nicely as we saw the market rallied up to 47. Does it stay there? Who knows? But it was the trade. So Herbalife, I just thought I'd show you. It was right up there. Anyway, we also have a futures page layout that we give people that lists all the markets that you should have. And what we have is all our different various time frames that are pre-programmed there. Okay? So we have everything preset, every page, every window preset. There might be a little difficulty, to be honest with you, as we transition going from 9.1 to 9.5 version with the code through the trading app store with the arrows showing up initially, but they've been working on that. I just wanted to be upfront with everyone. Next, I wanted to get into this for all of the stock traders out there. I'm not sure how many stock traders we really got in the room, but let me point out to you as I mentioned earlier, about the New York Stock Exchange Composite Index. Well, I have a breadth indicator page that lists, if you're trading the S&Ps, why not take a look at the advanced decline comparative ratio line? And if you're looking at the S&Ps, don't we want to see if there's strong volume coming with a buy signal in the market? And is it on an accumulation of the advanced decline? And is it above R, which we've put two little moving average components over them? So we have volume and advanced decline, volume and advanced decline, volume and advanced decline, volume, advanced decline, volume. I'm not really as interested in the volume on the NYSE composite because I really don't trust the NYSE as a gauge of overall breadth of stock market strength or weakness. And I'm going to give you my explanation in a minute. Let's take a look at the NYSE Composite Index. 30 years ago, well, I've been in the business now for 35 years. And when I first started in the business, the CAC 40, and I'm going to Paris tomorrow, but the CAC 40 wasn't even invented or created yet. Okay? The Paris Exchange wasn't even there when I got into this business. So, when we looked at the NYSE, the New York Stock Exchange Composite Index, they were not foreign companies. They were mostly U.S. based. And through time, I think this might clear up some things for people. Number one, the NYSE has approximately, and this is why people feel it's a very well-balanced indicator or index, is that it has 1,887 companies. Only problem is only 68% of them are U.S.-based companies. There's 349 foreign companies. And here's some of the top breakdowns within the UK, Japan, Germany, China, Australia, Spain, Switzerland, and a bunch of others. Those are the big 1%ers that it all adds up. But yes, while it does have 7% weighting for materials, I thought this was interesting. 20% is healthcare, 12% is industrial, 16% oil and gas, technology only 4.85%. That's pretty interesting. It almost has the same kind of weight as telecoms and utilities. So when you take a look at the NYSE, you got to say, well, what the hell makes the thing tick? Well, if you see on a given day healthcare going up, or here's another thing that's not disclosed, it also includes bond and real estate funds, REITs. And the bond funds, here's the best part, are valued in price. So if bonds and stocks go up, it's going to give you a false sense of strength. And really, it might be just a situation where people are floating back into bond funds. So when I take a look at something like this, I go, yeah, while it definitely is a diversified index, it's not telling me about the strength of our U.S. markets as much as people would think. So when you're hearing about people using the ARMS index, it's based on the NYSE Composite Index, and as you can clearly see, this isn't going to give me the true picture of maybe some of the sectors that I want to pay attention to, such as small cap, Russell, growth stocks. So the small cap sector, this is giving us more of a truer sense of what the strength of the market is, and the NYSE might be giving us a false sense of security of the market due to its weightings, rankings, and foreign inputs. Almost 50% or over 50% of the stocks contained in the NYSE, folks, are interest rate sensitive stocks as well. So that might not be the one we want to pay attention to. So if you're trading the spiders, if you're trading the S&P 500, wouldn't it make sense to have this indicator to tell you what the strength and the direction of the trend of the market is? So that's what we've created. And what I try to teach people is this. When we're trading near quarterly support like we were last at the end of January and everyone was getting bearish, many of you know that I was bullish the market because we were seeing an accumulation of advancing stocks versus declining, and we weren't seeing a breakdown in price. In other words, the price was going down. We were seeing negligible volume behind the decline. And all of a sudden, when we started to spike up, we started to see an aggressive move to the upside on more stocks advancing than declining. And again, the concept is strength in numbers. The more stocks that are going up in an index means it's not being manipulated by a few of the large cap heavy weighted stocks to that index. So that's very important why people need to know and use this indicator that we've created. And it is vital. Now, I've already mentioned about our scans, and to look at our pre-programmed scans with the daily high close, the daily low close, the weeklies, which are very powerful. Now, this bull market, eventually it's going to run out, and we're going to stop running scans for high close dojis, I'm here to tell you. And we're going to want to run scans for how many stocks are generating low close dojis, because it's a very powerful indicator and reversal pattern to the downside. So when we start to run scans, maybe it's not the quality of a few names that pop up, but man, if we run up buy signals and there's not that many buy signals, and then we run a scan for how many sell signals, and we find out that we have more sells than buys, that's not the net advanced decline change. That's actually algorithmic changes that take place, and that, my friends, is a very powerful indicator in itself, as well as when we utilize these tools, how to select better trades. So, how can you get this information or try it? If you are a TradeStation customer, it's very simple. What you want to do is open your account, click on View, click on the Trade App Launcher, and at the next thing that pops up on the side, you'll see a trading app icon right off the side, and then click on the Trading App Store. Next, type in my name, John Person, because this is the page that will show up. As you will see, the most popular, it is by far the most downloaded popular indicator, the free daily person's pivots in TradeStation's. I mean, they're a little, it's beyond them of how many people just love to have this. So you can always get my daily person's pivots, which is a fabulous indicator in of itself. Make no mistake if you know how to use it right. Next. And I think I've given you a good indication of how it projects higher highs, higher lows, and then can give you the market condition. So it's not just support and resistance, it's giving you that indication that the market is projecting higher highs and higher lows. But if you want the advanced trading system and you want a trial to this, you go up there to where my name, click on the lookup file, and then come down here where it says Persons Pivots Advanced Trading System for the free trial. Okay? Now, it is $150 a month. But if you're interested in a trial and the lifetime package, which is a one-time fee, you have to come to my website, Persons Planet, click on TradeStation under John Persons Indicators, and then you need to take action and to call us. You can call our office. If I am not, or we are not, or someone's not there, and I'll be honest with you, I'm not the one answering the phone, but if you call that number, we will give you instructions on how to get the lifetime license. Now, for TradeStation clients, here's what's really incredible. The Persons Pro package is not only eligible for it's not only eligible, but they're giving a commission rebate program for 100% of the cost. So if you trade, and one thing that I have done for people is that we have also introduced an amazing trading course, which is about 6.5 hours of instruction. And I would like to show you that right now because it's like one goes with the other. Okay? So with that said, if you go to my website, personsplanet.com, there's a specific link that you will need. It's called personsplanet.com, pivots.html. I'll post that into the room for you. All right, what is it? Well, we have this study course. Many of you may have bought it. It's $229. It is actually $289, but this special link gives you a discount for $229. We also have our new mechanical strategy system, and if you want to buy both, it's $495. combined as a bundle package. Now here's the deal. If you were and you bought the courses and you like the courses and you say, I want to try John's indicators and I want to use his information, and I want to go through and say, gee, John, like your scans, which tonight, this is live. By the way, we have tonight at the end of the day, Cigna, Cabot, COG, and that's on our list for some of our members, our trading members. Cabot Oil and Gas is one of the stocks that we were waiting for a setup to be a buyer. It has defied the law of gravity of the downside move. This is the radar package. And if you go through the trading course and you want to purchase the Pro package, then you will only pay, if you buy the course for $4.95, we will take that off of your purchase of the fee because we want you to have the right training. Okay? So the training course material will be applied to your purchase price. So here's the neat thing. TradeStation will give you, if you open or if you have an account, if you open a new account with them and you use this information, they will, number one, give you a, this is pretty awesome information for any trader out there, 100% rebate on any of your Purchase Planet purchases. So you can get the course for free, you can get the indicators for free, but they will give you a rebate to get that for free. But here's the killer. I don't know how long you guys have been a customer of TradeStation, but I've paid for a long time. If you open a new account and you are using this information and my stuff, they will give you a free platform fee waived for life. And that, my friends, is powerful. So you need to mention the promo code, and there it is. And when you call us and you say, hey, I'm interested in this trial, I want to get it, I want to get your information, John, how do I get this? I will make sure that you get that code, which gives you a 100% rebate by working with this webinar tonight. All right? If you can find a better deal, then that's your business. But I'm telling you, this is pretty good. 100% rebate and using this code, and you get your platform fees waived for life. So if you've known that the scanner costs money, if you know that the radar screen costs money, they will waive those fees for life when you open a new account, which is real easy to do, and utilize the Person's Planet purchases. So that concludes tonight's session. I think it's an incredible offer. If many of you are not familiar, you say, well, I like John's work, I've heard of him before, didn't really know what he really does. What are these indicators going to do for me? They're going to do an enormous amount of heavy lifting, finding some really awesome trades. End of story. And you know, when you like take a look at a company, and one of the things that we were looking at today is when you take a look at a stock like Ralph Lauren. And you know, the interesting thing is, while everyone's taking a look at the market, obviously we have which is interesting, as the market's kind of moving down, you get this high close doji, and all of a sudden we get this upside move with Ralph Lauren. The funny thing is that, you know, we see this occurring, and I have seen this, and it's not maybe you want to buy Ralph Lauren, you know, at 131 with a high close doji to it, but here's one of the keys is to find out how many stocks are actually forming a high close doji, right? Or generating a PPS buy signal near monthly support with a convergence in the momentum. I mean, you know, maybe you're not going to make a huge fortune on the trade. Maybe it needs a little bit more time element to it. But, you know, there's been some enormous setups and trades. This is one actually we did in our room. Friday, we got in on this trade. This is Twitter ahead of it. We actually did it with, our our advisory service called PA Stock Alerts. And one of the reasons is because it had generated a nice buy signal. You'll notice that the symmetry of the momentum indicator going from negative to positive, and you'll note that there was some strong volume surge ahead of it, and we were positioned for that little trade in Twitter. Now, I mean, there's, you know, some neat stuff about this. Actually, you can see our little, we've probably talked this up to death over the last couple days, but now today we finally got some exciting, some decent follow through to the upside there. Note that Twitter, by the way, what's really kind of, if you remember, we talked about Twitter and scanning for not just daily high close dojis, but weekly high close dojis. So even in January, another great setup as the market defined a nice volume, as well as, guess what? A huge convergence in the histogram. Price is moving down, but the histogram's going up, and then you get a high close doji. Now you can set your sights on what to trade in the market. So it really is a fabulous methodology to use. It's not complicated to learn. It's you know, very effective. We just don't use a lot of price-based indicators all by themselves. We use price, we use momentum, and we use condition, but, you know, nothing out of the ordinary that a lot of people wouldn't, you know, like you would want it to know about, like volume, for example. If the trend is rising and the volume is moving up in association, that's old school technical analysis. And I think a lot of people have actually been frustrated, but we have this tool, and we have a really a slick set of moving averages that help us to define that trend of the market. So even looking at like today's trade in Twitter and having the outlook over the last couple days, look at on an intraday basis. I mean, this is kind of like higher highs, right? The red's higher than each respective high, and the greens are. And even today, it's like, hey guys, you know, we got a nice move going. You had it just like McDonald's. Isn't this wild? Just like McDonald's on an intraday basis, we had a little high close doji, as I shared with you, on an increase in volume. So what was neat about this was like, okay, I think, and I told people, if you're, and we did options on this with our trading room, I said if you went with April options, then you need to maybe sell half your position out. And if you're with the May longer term duration, you need to sell a third of your options out. We started to lose a little bit of the momentum. And so with options, if you get a huge thrust really fast, what is the logic behind what the value of an option is? Demand. And if all of a sudden that move ends up, that's why with options in short-term duration directional trading strategies, you got to take something off the table. As it is, look at this other very important indicator, the last conditional change. The white lines, it just never broke the white line. So Twitter defied gravity. I also wanted to share with you, as I was being candid with you guys, about another company which I think has, you know, we popped this one up on our scans. This is called Nordic American Tanker Shipping. I mean, it still has a really dynamic feel to it, in the sense that the volume is starting to move up. This generated that little PPS buy signal. We had another high close doji. It was fairly optionable, by the way, and a nice little pop in the market. In the money $10 calls. I mean, they were dirt cheap. I think they were 48 cents at the time. You know, I'm not in this trade anymore, and one of the things that I would just say is what helped me to define that trade was everything that I talked about tonight. We had a buy signal, number one. Buy signal number one, positive momentum number two, and we started to see the volume start to kick in. And so for that particular trade, I thought it was a great defined risk, and you know, kind of wish I was still in it. But needless to say, we can't get them right all the time. But this is an incredible tool to help give you, the investor, an edge. And it has, I mean, seriously, this is the Bentley of indicators and systems. This has everything that I've ever and everything I've been using all my life. So I want to say thank you all very much for attending. If you are, we'll send out the replay. You can watch this again. There was some great, if you're not interested in the products, if you're not interested and you just wanted to come and say, hey, what does this guy got? Hey, that's great. If you are a serious investor and you're interested in learning more about how we can help you trade better, then definitely go to TradeStation, open your account, hit the view, get a free trial, take advantage of our offer, and learn how to utilize the high close doji, learn to utilize our last conditional change, the amount of information here of the time frames and the practical use of using support and resistance. I personally will tell you right now, this one single study course should be mandatory for all traders, and I mean, that's a fact. There's valuable information in here, more so than you've ever seen. We also talked about how to integrate the Ichimoku cloud charts and Bollinger Bands with the volume indicator and the PPS, and a lot of times you will find that still it's a lot of work to just use what we already know works best, and that's the PPS indicator. But I want people to a lot of people like using this analysis. A lot of people like using Bollinger Bands, and I'm here to share with you the techniques. Now, I've been in the business for 35 years. I think everyone probably could guess I've used Bollinger Bands at one point in my life. That's a fact. I've just been able to rely on what the charts tell me, what my indicators tell me, because it's just a little bit better of an indicator. But needless to say, it also doesn't hurt to learn more about the PPS indicator. And if you are still using Bollinger Bands, it's a very valid indicator. I just find that my stuff works a little bit better, a little sooner, and helps detect trend changes. So this may help you, if you're using those type of indicators, how to trade a little bit better. That's what that's about. So there we have A to Z. And then one of my other little things is about the comparative analysis trick using my indicators, and then how to switch between the cash and when you should be watching futures markets and vice versa. And for foreign currency traders, you should be using your analytics based on the futures markets. Now, we have a wonderful, in the advanced package here, you'll see where it says Forex Daily. It's the same concept. Where's the pivots in relationship, and where do we get all the different setups in the different markets, and how does it work and relate to my indicators? Well, when you use Forex, by the way, and I'm looking at the Japanese yen dollar cross, when we utilize this, you'll notice on a daily basis there's no volume. The JP volume indicator does not work. And the reason it doesn't work is there's no centralized marketplace to get volume analysis out of the dollar yen. Now, what if we go and scroll all the way down, and I go over to the futures, and I just scroll right over here to futures, and I click on the inverse, which is the yen dollar relationship. It's inverted. And then I go, well, if I flip the chart upside down from the Forex to the futures, I'm going to get the same picture. And this is on balance volume, because we do have a centralized market, and we can utilize the futures information to trade our Forex markets. So here was a little high close doji in the yen, bullish convergence with the histogram, increase in volume, and not that it's going to set your bank account on fire for huge gains, but it definitely gave you the trigger to get into the market and the confidence to see that there was some positive momentum, and you saw pretty immediate results with very low risk. So, any event, that does absolutely show you how you can utilize like and kind markets for your trading, whether it's Forex, futures, or equities. Everyone, I want to say thank you very much for your time. Definitely take a look at the trading course. I think you guys will have a wealth of newfound knowledge and trading information to utilize. Great setups there. That is the link, personsplanet.com/pivots.html. And remember, if you buy that course and you're a TradeStation client, TradeStation will give you 100% rebate. I wanted to thank you very much for your time tonight. Again, this was a TradeStation exclusive presentation. I've been working with TradeStation since my first purchase of TradeStation 4.0. I think it was in 1996, and I keep that on my bookshelf with my CD and my security block. And, you know, one of these days it may become a museum piece. I'm not sure. I doubt it. But needless to say, it is a bit of nostalgia. And we are, as we say, a lot of the information here and the way we've been able to accurately create these indicators with my rules designed by me the right way has been fantastic, and it's a great launch for TradeStation and TradeStation clients. Thank you all very much, and have a great evening.